Hello everyone. I hope you all are fine. Today we are conducting the webinar on accounting voucher in Busy. So in this webinar, I will guide you how can we post the voucher and record the data in the Busy software. So please listen carefully, and if you have any doubts and queries, you can ask me at the end of the session. So let me start the session. So in this webinar, we will cover the accounting voucher in Busy, introduction, benefits, types of voucher, components, rules of debit and credit, transaction, and in the last we will learn Q&A. So let me start the webinar. So please listen this webinar, watch the webinar carefully, and if you have any doubts and queries, you can send me in Q&A. I will handle. So now I'm starting. So first of all, what is accounting voucher? So as you know that as per the accounting rule and principles, we has to record all the activity of the business for preparing the data activities. Like if you're selling your product to the customer, if you're buying goods from the vendor and party, you are paying rent to landlord or property owner. So these all are activities of the business. So as per accounting language, we can say activity as a transaction. So in accounting, transaction means types of monetary transaction of the business you have to record in the data. So if money involved in the transaction, that means this is accounting transaction, and we has to record in the books of account. And after recording the transaction, we can prepare the reports and register of the business. So what is the definition? So accounting voucher is a voucher is a document containing the details of a financial transaction and is required to record the transaction in the books of account. So all type of monetary transaction we have to record in the books of account. So after recording the transaction, we can prepare the reports, we can view the reports of the business. Accounting voucher are document used in accounting to record financial transactions such as sales, purchase, receipt, payment, contra, journal, debit note, credit note, etc. So these all are transaction actually. So these all activity we have to record in the data. Those vouchers serve as evidence or proof of the transaction and help in maintaining accurate accounting record. So in the business organization, you know that you have to record the transaction. After recording the transaction, you can view the situation of the business, you can analyze the profit, you can check the payable and receivable, etc. Next slide is benefit. So what benefits you get if you are using Busy software? So first benefit is control over the payable and receivable. So if you are selling or buying the goods on credit, then you have to check bills receivable or bills payable details. So after recording the sale and purchase transaction on credit, you can check the payable and receivable details. You want to pay money, pending bills to which party, and which customer bills are pending for the payment. So you can check, you can analyze. And after recording the data, you can check the interest after due date of the bills, and you can send the payment reminder also to the customer for pending bills payment. Second benefit is simplifies audit trail. So after recording the transaction, you can view audit trail report. This is most important feature in Busy accounting software. So in this report, you can view each details of the transaction, like this transaction created by which user, at what time, on which date, and the other details also. So this is the audit trail report, and you can view each and every detail of the transaction in this report. Third benefit is accurate record keeping. So accurate report will show you after recording the transaction in the Busy software, and because account head will be reflect properly, and amount and quantity will be calculated automatically after recording the transaction, and all the reports will prepare with the correct information. So if you're recording the transaction in Busy software, then you can view the accurate data of your business, and all the correct information will show you in all the reports. The fourth benefit is better transparency. So transparency will be better of the data. And next benefit is easy to track transactions. So you can track the transaction details in very easy way. So suppose you are selling your product or you are buying your product from the party. So you can track each and every detail in this software with the proper manner. Improved financial report. The last benefit is, so after recording the transaction, all the financial report will generate automatically with the correct details, and you can view these reports as per your needs. So your time will also save. So you can save your time. So if you are using busy accounting software, most of the benefits you get, and all the accurate information, correct information, fast information you can view in the data. So these are the benefits. Next, types of voucher. So in business, we record three type of transaction: accounting vouchers, inventory vouchers, and dual vouchers. So in business, we record three types of transaction, and transaction we record in this voucher. Let me tell you for this. So suppose if your transaction belongs to accounting, if you are recording the transaction in accounting voucher, then only accounting will affect. And if you're recording the transaction in inventory voucher, so only inventory will affect. And the last is dual voucher. So if you're recording the transaction in dual voucher, then both accounting and inventory both will affect. So let me tell you about the transaction. Suppose if item is not involving in the transaction, like if you are paying the rent to landlord, so this is accounting transaction, only accounting will affect. So this transaction you have to record in accounting voucher, because only accounting is affecting. And if you are issuing the material from one go down to another go down, that means only inventory is affecting, not accounting. So this transaction you have to record in inventory voucher, because only inventory is affecting. And the last is dual voucher. If you are selling or buying the product from the party to the party, then your accounting plus inventory both will affect. Because if you selling the good to customer, then you receive money, okay, and your goods will issue. So accounting plus inventory both are affecting. So this transaction you have to record in dual voucher. So these are the vouchers, types of voucher you can see on my screen. So accounting voucher is payment receipt, journal, contra, debit note, credit note without item. So these transactions voucher are belongs to accounting voucher, because if you're recording the transaction in this voucher, then accounting will affect, but inventory will not affect. Because if you doing the payment to party, if you receiving the money from the customer, if you paying the rent, if you depositing money to bank, if you withdrawing money from the bank, and if you issuing debit note, credit note for parties, so these are accounting transaction, and you have to record these type of transaction in accounting vouchers. So in the busy accounting software, all the accounting vouchers are available. You can record the voucher as per your need. Second, you can see the dual vouchers. So if you're recording the transaction, then in dual voucher, then your accounting plus inventory both will be effect. Like if you're recording the sales transaction, purchase transaction, sales return and purchase return, then your accounting plus inventory both will affect. So these are dual voucher, because both accounting plus inventory both are affecting. And the last is inventory voucher. So if you're recording the transaction in inventory voucher, then your inventory will be affected, not accounting. Like if you transferring your stock one material center to another material center, one go down to another go down, one warehouse to another warehouse. And production voucher. So the production transaction is also inventory voucher, because if you producing the goods, producing the finished good from the raw material, then only inventory will be affected, because raw material will consume and finished good will generate. So at that time, only inventory are affecting, not accounting. Second, unassemble voucher. So if you are unassembling the voucher, means raw material will generate and finished good will consume. So only inventory are affecting. The next one is stock general. So stock general is also belongs to production. And if you are generating your material, your items stock, and if you're consuming your item stock, so you can record in the stock general voucher. And the last two is material issue to party and material received from party. So these two vouchers are belongs to inventory voucher, because if you are issuing the material to party and if you're receiving the material from the party, then only inventory will affect, accounting will not affect. Comes to next point is component. So these are the components of accounting voucher. At the time of recording transaction in accounting voucher, you have to specify these detail one by one. So if you know about the accounting rules, then you can record the accounting transaction. Let me tell you the overview of the rules. So how can you record the data in accounting voucher? These are the components. You have to record these information like date, voucher number, debit account, credit account, amount, narration, authorized and prepared by signatory, receiver signature. So these details you have to enter, you have to specify in the voucher at the time of accounting transaction. So date you can specify, voucher belongs to which date, voucher number you have to specify, debit and credit account you have to select, and amount you have to mention, narration you have to enter, and the authorized signatory detail, receiver signatory detail. So these details you have to specify in the transaction. So these are the components of accounting vouchers. And what is debit account and credit account? So you have to learn golden rules of account for this. So let me tell you, let me explain you about the golden rules of accounts. So these are the golden rules of accounts: personal, real, and nominal. So this is most important rule of account. So if you want to record the accounting transaction, then you have to learn this rule, golden rules of accounts. So in accounting, there are three types of accounts: personal, real, and nominal. Personal account means if any person or organization is involved in the transaction, like your customer, your parties, your employees, so these are person. So if in your transaction any person, any organization is involved in the transaction, that means this is personal account. So if any personal is involving the transaction, then the golden rule of account is debit the receiver and credit the giver. Means if person is receiving the money, that means he is the receiver because he is receiving the money. So if he is the receiver, then you have to treat as debit in the transaction. Example, if you doing the payment to party, then party account will be debit because that time he is the receiver. Okay. And if person is giving money, that time he is the giver. So then you have to treat as credit. So in the transaction, because that time he is giving money, so you have to treat as credit. So if person is giving the money or receiving the money, so according to this rules, you have to create the transaction. If person is a receiver, then you have to treat as debit, and if person is giver, then you have to treat as credit. This is the rule of personal account. Second is real account. So real account is an account that retains the ending balance at the end of the accounting period and carries forward that balance as opening balance to the next accounting period, like cash account, bank account, asset and liabilities. So as you know, if any account you want to transfer, you want to carry forward the balance to next financial year as opening, so you have to treat as real account. Okay, so what is the rule of real account? Debit what comes in, credit what goes out. If comes in, then you have to treat as debit, and if goes out, then you have to treat as credit. Let me give an example for this. Suppose if you're receiving the cash, so that time cash is receiving, mean cash comes in, so you have to treat as debit, cash account as debit. If you are paying money to customer, to party, means if you giving the money. Okay, so what goes out, cash is goes out, that time you have to treat as credit, cash account as credit. This is the rule of real account. And the last is nominal account. Nominal account is a general account that you close at the end of the each accounting year, and account relating to business expenses, income, gains and loss. So what are the nominal accounts? Expenses, losses, and income and gains. These are nominal accounts. So you have to treat as, if expenses and losses involving in the transaction, then you have to treat as debit. And if income and gains involved in the transaction, then you have to treat as credit. So suppose if you paying the rent, so rent is expense, and expense you have to treat as debit. And if income, if you earn the income, then you have to treat as credit. So these are the rule of accounting. So with the help of these rules, you can record the data in the accounting vouchers. So you can read Personal account rule is debit the receiver, credit the giver. Real account rule is debit what comes in, credit what goes out. Nominal account rule is debit all the expenses or losses are debit, and credit all income and gains. This is the accounting rule. This is a golden rule of accounts. Next, rules of debit and credit. So you can see on my screen. So name of the accounts, if asset is increasing, then you have to treat as debit. And if asset is decreasing, then you have to treat as credit. Asset is real account. Liabilities. So if liabilities involved in the transaction, then if liabilities is decreasing, then you have to treat as debit. And if increasing, then you have to treat as credit. Capital, owner's capital means owner's investment. So if capital is increasing, then you have to treat as credit, and capital is decreasing, then you have to treat as debit. Revenue and expenses, you can see on the last options. So revenue is increasing, then you have to treat as credit, and revenue decreasing because revenue is income and income is nominal account. So if revenue is decreasing, then you have to treat as debit, and revenue is increasing, then you have to treat as credit in the transaction. And the last is expenses. So expenses is also nominal account. So you have to treat as, if expense increasing, then you have to treat as debit, and if decreasing, then you can treat as credit. So these are the rules of debit and credit. Next is entry system, payment and receipt. So in busy software, we have two type of entry system for payment and receipt voucher: single entry system and dual entry system. So single entry system, if you enable this option in the voucher configuration, uh, single entry system and dual entry system. So these entry systems are available in busy software. So if you select single entry system for payment and receipt voucher, then in the accounting transaction of payment and receipt voucher, you have to specify the mode in the header as cash or bank. So you paying money by cash or bank, and you receiving money as cash or bank, you can select the mode in single entry system, and in the body part you can specify the account party. In double entry system, payment and receipt voucher, you have to select the account as debit and credit. You can see the example on the screen. So in single entry system, you have to specify the mode, and in double entry system, you have to specify debit and credit side of the accounts. So if you're doing the payment, then cash will credit, and if you are receiving the money, then cash will debit, cash and bank will debit. This is the payment voucher. You can see the image. So payment voucher is used to record payment transaction made by an organization or supplier or vendor by cash or bank. So if you doing the payment, then you have two options. You can pay through bank or through cash. So that time you have to select cash or bank as credit, and you have to record this transaction in payment voucher. You can treat account as debit, party account as debit. This is the payment voucher. Next, this is a receipt voucher. So receipt voucher is used to record transaction for money received by an organization from its customer by bank or cash. So that time you have to treat cash or bank as debit because this is real account, and you have to treat as debit. If you're receiving the money by bank or cash, then you have to treat as debit, and you can record this transaction in receipt voucher. You have to record this transaction and treat account as credit, treat party or customer account as credit. This is the receipt voucher. Next is journal voucher. So journal is a basic book of original entry in which transactions are recorded in chronological ledger order. General voucher are used to record transactions that cannot be categorized as sales, purchase, payment, or receipt. Suppose you are confusing and you don't know this transaction we can create in which voucher. So you can create these type of transaction in journal voucher. Like if you paying the rent, if you pay doing payment to GST department, and if you purchasing fixed asset, if you investing capital in the business, if you investing money in the business. So these are the transaction of general books, and you can record these type transaction in general voucher. So you can see. So you have to follow the golden rules. If nominal and real and personal accounts are involved in the transaction, then you have to record the transaction as per the rule. So what is the rule of personal account? You know that. And real account and nominal account. So as per the rule, you can record the data, you can record the transaction in the general voucher. This is contra voucher. So in contra voucher, we can record those transaction which is related to bank or cash. So if your transaction is belongs to bank or cash, means both accounts are like cash or bank. Debit is also cash or bank, can be cash and bank, and credit also same. So in contra voucher, we can record those transactions which is related to cash and bank, such as depositing cash in the bank, withdrawing cash from the bank, and transferring fund bank to bank. So these three types of transaction we can record in contra voucher. If you depositing money in the bank, if you withdrawing cash from the bank, and if you transferring money bank to bank. So these three transactions you can record in contra voucher. You can see. So if you receiving cash, then you have to treat cash as debit, and if you depositing cash, then you have to treat as cash as credit. This is debit note voucher, and this is also accounting voucher. You can record the transaction in this voucher also. So debit note is a document issued to a party stating that you are debiting their account in your books of account for the stated reason or vice versa. This is commonly used in case of purchase return. So if you want to record the purchase return transaction without item, then you can record in this voucher, debit note without item. And this is credit note. So credit note are issued when there is a need to modify an invoice. It is commonly used in case of sales return. So if you want to record the transaction without item in sales return, then you can record this voucher at credit note. So these are the accounting vouchers. Now comes to dual voucher. And what is the uh, rule of dual voucher? So if you recording the transaction in dual voucher, then your accounting plus inventory both will be effect. So what are the component you have to specify? So date, voucher number, text type, party, material center, narration, item details, bill sundry details, other required details, and authorized signatory receiver signature. So these details you have to specify in dual voucher. What are the dual vouchers? Sales, purchase, sale return, purchase return. These four vouchers are belongs to dual voucher, because if you recording the transaction in sales, in purchase, in sales return voucher, in purchase return voucher, that means your accounting plus inventory both will be effect. This is the dual voucher screen you can see. So in dual voucher, you can record sales, purchase, or sales return, purchase return transactions. So in this voucher, you can specify, first of all, you have to specify date. You can mention voucher number, tax type, sale type, purchase type, your party, your material center, your item detail, and in the last bill sundry section, you have to specify the bill sundry, the additional charges like discount or taxes, etc. And other details you can also specify in the dual voucher and save the transaction. So this is the dual voucher window. Now let me give an example, the practical example of the transaction. So Mohit has a following transaction prepare accounting equation. So Mohit want to record the data in busy software. How can Mohit record the data? The first transaction you can see, business started with 1,75,000 in cash. So this is the first equation. And business started means you are investing the capital in the business. So as per the business entity concept, owner is separate and business is separate. So you have to record the data as business point of view, not owner's point of view. So if owner is investing money in the business, that means money is receiving in business and owners giving the money to business. So we have to record the data at as owners, not owner's point of view. we have to record the data as business point of view in the busy accounting software in the accounting data. So let me tell you how can you record the this transaction. So first of all, before creating the transaction, we have to create the masters. So in this transaction, two masters are involved. First is capital means investment, and the second is cash. Okay, so these two master you have to create in the company. So cash is by default created at the time of company creation, and capital account you have to create manually. So let me tell you how can you create. So this is my busy. Let me open the company. See, you have to go in master account and click on add. You have to enter the name of owner capital. So let me tell you, I created already capital account. This is the accounting master owner's capital account, and in the group field you have to select this is capital account because this is the investment of the owner. So you have to create this account master under capital account group. Save this master. After that you can record the transaction. So this transaction you can record. See, business started with 1,75,000 in cash. That means cash receiving. Okay, cash receiving in the business. So we can record this transaction in receipt voucher because we are receiving money. Business is receiving money from the owner. So add, click on add receipt voucher and specify the date and credit. So what is credit? What will be credit? Credit will be debit because this is real account, owner's capital, because capital balance will carry forward to next financial year also. So this is a real account. So 1,75,000. This is the amount. So credit and select the account, owner capital account, and amount is credited 1,75,000 and debit is cash. You can specify the narration also, capital investing in the business. So this is the narration remarks you can enter in the narration. Save. So your transaction is saved. After recording the transaction, you can check the ledger book, and a ledger book is available under display. You can go in account books, account ledger, account wise, standard, on account. So let me check cash account. Now see, we received the cash from the owner, and the cash balance, closing balance, you can see 1,75,000. This is the debit balance because we received the money from the owner. Next, capital. See, sorry, capital, owner's capital account. So you can see the transaction. So all the accounting transaction which is belongs to account, you can check in accounting ledger. See, so in the capital ledger, you can see cash is showing as a credit. Next transaction is purchase goods from Rohit trader bought 50,000. Now that time we are purchasing goods from the Rohit trader. So Rohit trader is the party. So we are purchasing the goods from the Rohit trader. How can you record this transaction? So this transaction belongs to purchase. Now purchase is dual voucher. So you have to enter on purchase, click on add. Now see, this is the purchase voucher window, and we can record the purchase transaction in the voucher of purchase. So let me enter the date. First we have to specify the date. Second, the bill number of the purchase bill. Text type you have to select, and this is the Rohit trader. And if after before recording the transaction, you have to create a master first. So press F3 and your account master window will open, and you can create the accounting master in this window. So after creating the master, you can select this master in the transaction and you can save the transaction. So Rohit trader is a party. we are purchasing the material from Rohit Trader. So we can create the account master of Rohit Trader like this. So first of all, you have to specify the name, print name, group you have to select. This is under sundry creditor. Address you have to specify any opening balance you can mention here and other details also. So this is the account master window. Now Rohit Trader, and this is the item. Enter the quantity, price you can specify, and now see the purchase within 50,000. So now your purchase is completed. Save the transaction. Your purchase is completed. After that, you can see the purchase ledger also. So the what is the shortcut key of ledger? So you can press Alt plus L. This is the ledger report shortcut key. Alt plus L. L means ledger, and you can select the account master here, and you can view the ledger book. So we created one transaction in purchase voucher, and the transaction is showing in the ledger book. You can see. Next, the third transaction is interest paid rupees 3,000. That time we are paying the interest, so we can record this transaction in payment voucher because we are doing payment. So this transaction we can record in payment voucher. Now we can add payment voucher, specify the date here. After that, now you have to select the account. So interest payable, this is the account of interest paid, and interest is the expense. You can see this is the nominal account. And what is the rule of nominal account? So all the expenses and losses we have to treat as debit. So this is the expense, interest payable. Now amount is 3,000, and we paying the money of interest, so in cash or bank, by cash or bank. So we can select the account by cash and save. So transaction is saved. Next transaction is purchased furniture in rupees 10,000. So this time we are purchasing furniture, and furniture is asset. Furniture is fixed asset. So we have to record this data. We have to record this transaction in journal voucher, because we are not purchasing material. We are purchasing furniture for the business, for the office, and furniture is fixed asset. So go in journal voucher, add, and specify the date. Next, now fixed asset is a real account. And what is the rule of the real account? So what comes in and what goes out? What comes in, treat as debit. What goes out, treat as credit. So furniture is comes in. So furniture, and we can create furniture account master under fixed asset group. Amount is 10,000, and credit, you can select the account you are purchasing furniture from, which party, or if you want to specify the cash or bank account, you can specify cash or bank also. Next, advance received from party 10,000. So now that time you are receiving advance, means you are receiving money from the party. So you have to enter this transaction in receipt voucher, click on add, specify the date and party. So specify the amount and cash as debit and party as credit. Because you are receiving money, you are receiving cash, and cash is real account. So what comes in, cash is comes in, cash is receiving. So you have to treat as debit. Next transaction is cash received from Manish. So this is also receipt voucher, and we can record this transaction receipt voucher. So we receiving money from the Manish. Manish is sundry debtor. Manish is our customer, and we receiving the money from the Manish. So we have to treat Manish as credit 5,000 and in cash. Next, rent paid in cash 1000. So that time we are paying rent. So we can select in payment voucher, and you can record this transaction in payment voucher. Rent you have to select as debit is 5000, and cash or by bank you can select the account. So only two account will show you in the drop down list. If you selecting as credit in the payment voucher, cash or bank, you can select the account and save. Next, cash withdrawing from bank. So this is the transaction is belongs to contra voucher, because debit and credit you have to select. Debit is also cash or bank, or credit is also cash or bank. So this is the contra voucher transaction, and we can go in contra, add. Now see, we are withdrawing cash, means cash is receiving in the business. So cash we have to treat as debit is 3000, and bank balance is decreasing. So balances goes out. So we have to treat as credit bank account. I say bank account. Let me tell you bank. See, this is a bank account. So we can select bank account group in the bank account master. Next transaction is transaction a depreciation charge on fixed asset. Depreciation is an expense, and depreciation we charge on fixed asset. So this transaction we can record in the journal voucher. And depreciation is expense, and expense is nominal account. So as you know the rule, as per the nominal account rule, we have to treat depreciation as debit and credit as fixed asset. So we have to go in journal voucher, depreciation account. Depreciation is an expense. You can see amount you can specify, and furniture is fixed asset. So you have to select furniture as credit, save. Last transaction is GST payment paid rupees 2500. So you are paying, you are doing payment, GST payment to government. So you can record this transaction in payment voucher and select the account GST payable. This is the duties and taxes account, you can see, and specify the amount of tax and select credit account. So you are issuing money to government, so you can select it, treat as credit. So these are the transaction we recorded in the data. Let me show you the report. So the ledger report, let me show you. You can press Alt plus L shortcut key. Cash account, see, 1st April to 31st March. See, so these all transactions are to cash, you can see. So in this transaction, cash is debiting or crediting, and as per the transaction, your closing balance will come automatically under the report. You can see the closing balance. So in this transaction, cash is debiting, cash is debiting, cash is debiting, and in this transaction, furniture, cash is crediting, cash is crediting. You can see this is the ledger book. Let me show you another report also. This is the financial report, balance sheet, and this is the final report of the business. This is the balance sheet report, you can see. So all the account balances are showing under the categories account, under the headings, current asset balances, and these report will prepare according to your transaction. This is the profit and loss report, you can see. See, so opening stock, closing stock, purchase balance, sales transaction, expenses, income, and direct expense, indirect expense. So all the expenses balance on the account balance, sale purchase balance, interest payable balance, depreciation, rent. So all the accounting transaction will reflect in the report. See, you can check trial balance report also. This is the trial balance report, debited balance and credited balance of which account. So as per your transaction, after recording your transaction, your report will generate automatically in the busy software. You can view these report as per your need. So these are the accounting transaction. So you can record the transaction in sale voucher also, in purchase, sale return, purchase return. So as per the transaction, as per the activities, you can record the transaction under transaction. All the vouchers are available in busy software. You can record the transaction. Now, question and answer. So the question one is, how many sites are there in accounting vouchers? So two sites, debit and credit. So each transaction has two effect, debit and credit. Second question is, what should be debited if the machine is purchased in the cash? So if you are purchasing machine, so machine is fixed asset. So you have to treat machine account as a debit. Third question is, what is the books in which all accounts are maintained as known as ledger book? So all the transaction will show you in the ledger book of the account. You can view. Question 4 is how to enable the single entry system for payment and receipt voucher. Go to administration, configuration, feature and options, account, enable single entry system. Let me show you in the busy software. See, this is the payment voucher. So this is a double entry system, you can see, because we are debiting and we are crediting also. This is a double entry system. If you want to enable single entry mode, then you have to go in administration, configuration, feature and options, and enter on accounts and enable this option, single entry system for payment and receipt voucher. This option is showing hide because we entered some voucher in the payment and receipt voucher. So first of all, we have to remove the transaction in payment and receipt voucher, then we can enable this option. So this option we have to enable in starting of the transaction. So let me remove the transaction first. You can remove the transaction in bulk through shortcut key Control Alt D. Now all the transactions are deleted. See, no transaction in the payment and no transaction in the receipt voucher also. So we have to go in configuration, feature options, and accounts. This is the option single entry mode. Now see, this option is active, gets active now. Enable this option, save. After that, the single entry system is enabled and we can record the payment and receipt voucher in single entry system. So this is the payment voucher. Now see, we have to select payment mode in the header of the transaction, header of the voucher. So now we are doing payment. So we are doing payment by cash or bank. We can select the mode, and in the body part of the voucher, we can select the account. So if we are doing the payment to party A, we can enter the amount and save. Same as receipt voucher. So if you receiving the money from the customer from the party, then you have to select receipt mode as cash or bank in the header of the voucher, and you can select the party in the body part. So this is single entry mode, single entry system, because in this system, if we enable the single entry system, then we have to select mode in the header part. And if you disable this option, if you are maintaining double entry system, if you recording the data through double entry system, then you have to enter the transaction by debit and credit. The last question is, what is the formula for the accounting equation? Is asset equal to capital plus liabilities. This is the formula of balance sheet. So asset balance is equal to capital plus liability balance. Let me show you the balance sheet report. See, this is the balance sheet report, and capital is equal to, sorry, asset is equal to capital plus liability. See, capital plus liability. So asset is equal to capital plus liability. This is accounting equation. So this is the webinar. I hope you understood this topic, accounting voucher, how to record in busy accounting software. For further assistant, call to our help desk. This is the contact details you can see on my screen. 5x82 you can dial, and support@busy.in. This is our email ID for support. You can contact if you have any query and doubts in any topic of busy accounting software. Thank you very much. Good evening to all.